Good morning, everybody. Let's check some stuff real quick. All right, y'all. Hope y'all been having a good weekend so far. It's just been very interesting vibes the last week or so. Some things from the last video I made in terms of counter trend trading, one of the conversations I was having with my private community. Things have changed since then. Something to keep in mind is we're going into a new quarter soon. On the 16th, we should have a new quarter. So that may change sentiment, or we may have started to see that already in the market with that huge drop in the indices. All right, it's been a very massive drop. In the last call, we were wanting to observe this up candle and this fair value gap. I would have liked to see price not break this low. I think I mentioned in the counter trend video that we were talking about, like a forecast and just a bunch of other topics. But I mentioned that if this low was to be violated, right, we would have most likely seen a pretty aggressive drop. I wanted to observe what the response would be from this up candle, and obviously it's was staggered a little bit, but nonetheless, the idea of small ranges leading to large ranges like this candle leading to small ranges, that logic is also true and has proven to be true with this current price delivery. We could see how the NASDAQ returned back into that. These consecutive up candles is a bearish order block, and this is a fair value gap. Right, so price gave an impulse lower, shifting market structure. Okay, and the price came back to the fair value gap, hit the order block, and then we see the drop as a result. Again, I wanted to see if price could hold itself inside this up candle and inside like this volume imbalance, this fair value gap. I didn't want to see it get down into here if we were going to stay bullish. But what has happened, we had an SMT at the highs, right, or at the fair value gap, meaning that the S&P just failed to get up there, and the NASDAQ was able to get up there, right? So the response from here, the fact that this up candle was not respected, the fact that this swing low was violated, and then the big drop as a result of that, leads me to now start to believe that we may continue to see more dynamic downside delivery. We'll see if that remains to be true going forward. Another thing I did point out before we get into the bonds and yields, which is, a very, very important part to our process, as you guys who have been here for a while know. But one thing I wanted to point out, let me open this up real fast. We're going to talk about seasonality. Okay, so with this low being violated, okay, the response that we've got makes a lot of sense if we pull up this chart here. Let me go ahead and pull this up. All right, so if we look here, we could see going into September, leading towards part of the next quarter pretty much, we could see how DXY has a tendency to want to go higher, right? So it's reasonable to anticipate that some type of upside move for the DXY has a interest seasonally in becoming part of the equation. But then we also take ourselves to the S&P, if I could find it. Take ourselves to this S&P chart, and we could see, in conjunction with the interest of DXY potentially wanting to go higher based on seasonality, we can also see how the S&P going into September has an interest to drop, right? So all three lines are going in the same direction to the downside. With that being the case, it makes perfect logical sense, since this low was violated and we went into September, right, with a bearish seasonal tendency and a bullish DXY tendency. Basically, when this low was violated, it makes sense with this S&T at the fair value gap for price to have declined the way that it has. Right? I wanted to wait for a little more evidence, right? Because, I don't like changing things too quickly. Okay, but since this low was violated and that S&T occurred, it was reasonable to anticipate this type of drop. Now, because this up candle was violated, because all these gaps were violated, and this swing low was violated, we can now see that this high being ran, shifted market structure here, didn't present a fair value gap, but once we violated this low, we see how the YouTube model on this daily time frame has taken place to the downside. Now, with that being the case, right, prices dropped a tremendous amount. Going into the next week, it's reasonable to anticipate price pulling back into this large range. So going into the week, the initial bias is bullish, right? Because we want to see price pull up. But the overall narrative right now seems as though it has shifted to bearishness. Okay, so any type of buys, unless this high is violated, would be, in my opinion, counter trend, because we have now changed, right? Going into a new quarter, going into a new month. So similarly to how this dropped and came off the low aggressively back to the buy side, I wouldn't disregard the possibility for this drop to just be some type of manipulation, right? Especially, again, if we get above this high, if it breaks through the midpoint of these consecutive up candles and then violates this fair value gap, my attention would then transition to attacking the highs here and then possibly these relative equal highs here as well. Okay, so that is the thought process going into the next week. We could see how the Dow also shifted market structure. There's multiple swing lows that have been violated, so I wouldn't be surprised if that results in a break in market structure plus the seasonal tendency. Okay, but again, because it's been so aggressive to the downside, similarly to what it did over here, it's reasonable to anticipate some type of pullback. And then we'll study how price respects or disregards this fair value gap, right? If it acts as resistance. We got this wick here we could also look at, measure out the midpoint of that wick. We don't want to see it get above that, right? And so these are some of the things that we pay attention to, plus this volume imbalance too should be able to act as an inversion, right? Some type of resistance. All right, so as I always do when I do these weekly preps every week in my private community and every so often here on the YouTube channel, aside from the other live sessions, we got to start from bonds and yields, right? Look at the news. We have CPI on Wednesday. We have no news Monday and Tuesday, so we may end up being a little quiet on Monday and Tuesday, preparing for CPI. All right, and then we got the bond auction, which will have an impact on the 30-year bonds, which is here, this one, right? So we're going to want to observe that. And then we obviously have a couple other things like PPI and unemployment claims, and then this consumer sentiment and inflation expectations announcements as well. So we're going to keep our eyes there. If we don't find anything Monday, Tuesday, or Wednesday, Thursday, Friday should be reasonably eventful if CPI doesn't just wipe the board with, a ridiculous move, which it may. It's highly likely that it will. But we'll see. Going into CPI, just like FOMC and NFP weeks, you got to be extra patient, extra cautious, and you also don't want to be reckless, because you never know what could take place when CPI, FOMC, so on and so forth are in play. Last week, we found some pretty beautiful opportunities in my private community. We did make the adjustment I just mentioned, real time. We did favor until bullishness fell out of favor. We were trying to identify reasons to go back in line with that. But then, like I just mentioned, price has chosen to do something else. So what does that mean? We identify what signals changed that view. In this instance, multiple downside PD arrays have been violated. The SMT at the highs, between these highs and the fair value gaps, right? And now, especially since we broke through this low, we should not have to return back, or should not at all return back to this high, the midpoint of this wick, this high, and this volume imbalance here as well. We should stay below that now, right? If that changes, then obviously we'll go ahead and make more adjustments in alignment with that. But so far, at this current moment, we're so bearish. Going into the next week, we want to observe a possible retracement back into that previous week's range, previous Friday's range as well. And then we're going to monitor what happens inside there, right? We got volume imbalance. We don't want to see it attempt to get back up there too much. It's reasonable to anticipate price retracing a little bit, so then we can position like smart money at a premium, right? Using power 3, especially if we're going to be bearish. We want to see price go against the bearishness early on, right? If you haven't looked at my power 3 series, you definitely should do that so you can get a better feel for navigating daily and weekly ranges. Very important topic in terms of what we're talking about here and what we talk about on a weekly basis. So as I always mention as well, when we go into Sunday and Monday's trading, we got to pay attention to Friday's high and low. That's the most near-term liquidity, because if price is going to seek some type of area down here, or if it's going to seek stuff up here, it has to get through those levels of liquidity first, right? So again, going into Sunday and Monday trading, the first thing you pay attention to is obviously Friday's low and Friday's high, because again, that's the most near-term liquidity. Okay. Again, it's reasonable to anticipate a run back into this range, because power 3 and how that operates. When there's a large range, just like there was over here, it's reasonable to anticipate small ranges. Hence, the term small ranges lead to large ranges lead to small ranges. Because this was a very large range, given that logic, I'm assuming that something small is going to take place, especially with no news. But again, I'd like to see us return back into the Friday's range, and then eventually, if we do continue to be bearish, aim for this low. And then we have other previous day's lows as well to target as we march our way lower, if that is going to be the case, right? Because there's CPI, because we're going into a new quarter on the 16th of this month, a week before and a week after the switchover, the rollover they call it, in contract months and quarters, generally those are low probability conditions, or a little bit more difficult to read, because we're transitioning from one quarter to another. All right, so the rollover grace period you want to give yourself is about 3 weeks. So the week before, which basically is this coming week, the week of, and then the week after, you want to be very cautious and very methodical and patient. and just observe what price is going to do, because it'll set the tone. And if you can get a feel for what the tone will be at the beginning of the quarter, right, generally you'll have a pretty good idea of what price could potentially do. And then you merge the seasonality and COT, which we're going to talk about here in this video, and then you can get a pretty solid understanding. But like I said, so moving away from the news, looking at the yield market, we could see how there's very obvious lows here that look like they're going to be attacked, just like how I mentioned the large ranges in the indices right now generally lead to small ranges. We also want to pay attention to the yields as well in that same manner. Everything will do the same thing in terms of power 3 dynamics. It's present everywhere. So with that being the case, you cannot discount that portion of things. So price has dropped lower. We've taken out lows. Now we've left equal lows here. Okay, so moving down to the daily chart. One thing to consider as well, if we are going to look for the DX or the indices to go lower, we want to see this go higher, right, at some point. So that's something I'm going to be monitoring as well. I want to see what price is going to want to do. It seems as though they have set a pretty decent pool of liquidity up here. We also have fair value gaps up here. If you notice here, we have a SMT as well that led to the drop. That's not what we want to see. If we want indices to go lower, the yields push DXY around. So if this is going lower, DXY would go lower, right? So when there's a crack in correlation like there is currently, it's just showing you evidence of what I just mentioned a second ago. How the week before, the week of, and the week after rollover periods can generally have skewed information, leading to harder than normal conditions to navigate. So if you do struggle the next couple of weeks, which if you stick around with us, you'll probably be able to navigate that. But if you do find yourself struggling on your own, understand that that's to be expected. It's going to be a little more difficult, and you have to really know what you're doing. That doesn't mean be scared of anything, but it does mean you need to be more attentive and very much paying attention to details, and just be patient. Don't force things. We have news coming out for the 30-year bond yields as well, like I mentioned here, or the bonds, not the yields, the bonds, which is here. So we're going to want to monitor that as well. Okay. So my assumption, because we had such a large range lower, I wouldn't be surprised if, considering they took these lows out too across the board, aside from, this low, we could definitely see price run higher. And then if it wants to go lower, we'll end up probably seeing this drop in the indices as something similar to this, a drop just to go higher eventually. So again, that's just some things we're going to monitor. So as far as what we see in price currently here, right, we have a fair value gap up here, Friday's high, Friday's low, just like I mentioned. So if anything's going to happen, one of those areas is going to be attacked. Even if this low is going to be violated, we still have Friday's high and low here. Friday's high, Friday's low. Okay, so those are our near-term liquidity pools for the yields. If the indices are going to go lower, again, we want to see a bullish response from here pretty aggressively, right? And then try to get price to break through this fair value gap. If we break through this fair value gap, I'm pretty confident the price will most likely end up, trying to rage up here and attack this engineered liquidity above these highs. All right, so that is something to monitor. And if we are bearish in the indices, that's what we prefer to see. And then that would lead to bullish DXY. All right, so we're gonna feel out how things transpire going into CPI, because that's gonna, in my opinion, dictate probably what's gonna take place the next month or so, going into the rollover period. All right, so that is how I feel about that. And we see how this fair value gap was fully filled. We'll see if this ends up dropping. Again, if indices are going to fall, we'd like to see this fall as well, get below this order block here. Move to the, well, if you look at the weekly, we're going to see what happens if price does return down into, you know, these down candles. We'd like to see that show no respect if we are going to look to be trusting bearishness in the indices and bullish DXY. Okay, but again, we're going into CPI, so we're going to have to fill out what's going to take place there, because CPI, FOMC, a lot of times those things set the tone for the months, and a lot of times for the quarters as well, depending on how large the response is. Okay, so I'd prefer, if we are going to be bearish on the indices, to see this drop lower, because the bonds push the indices around. Okay, so yeah, with that being the case, again, I've talked about this topic a lot. I talk about it every time I'm on the charts, even in live sessions, when we're actually trading, because this is vitally important. It's a vitally important part to the process of validation and invalidation when it comes to narrative and bias, because this pushes the indices around, and the yields push the bonds around. Push the DXY around. Okay, here is the symbols for those as well. So you want to have a trio, so you can monitor S&T between the trio of assets, right? And then these here are the bonds. So these push the indices around, these push the DXY around. And you merge them together in terms of analysis to get a justification for a particular narrative on the indices and the DXY. Again, sometimes it's skewed. Sometimes it's not clear. You don't have clarity with it because things are doing the opposite of what they're supposed to do. Like right now, if we're going to see bearish indices, we're going to have to see this rally so we can have a deeper trust when it comes to, whatever the indices are going to do. In this case, if they are going to drop, we want to see the yields go higher, because that justifies potential bearishness in the indices. And then obviously, if that's the case for the yields, and we want to see indices fall, we want to see these fall as well, right? We do see S&T, so that's a good sign here. Okay, we see S&T at these highs. All right, so that is, partial justification for us to see some type of downside objective fulfilled and continued in the indices. So we'll monitor as we walk forward that observation and see if this is going to respect this. We've already come off the high, so we'll see if we can get back down below this previous week's high, and then see if we could start marching towards some type of sell side liquidity. We have a fair value gap here. If we move up a little bit, we'll be able to find an order block we could use right here. So that's a good order block to use in terms of validation, right? So I just showed you that daily fair value gap. Well, if we press down, break through the midpoint of this, then that'll violate that order block. And then that'll just start adding to our downside invalidations for or validation for price to want to continue to go lower in the bonds here. And again, that justifies bearishness in the indices. So some people think this part of the analysis is boring. Well, what is extra boring is completely getting destroyed every week and being totally aimless and lost in your analysis, not being able to build any trust. So make sure that you realize that it's not just about one market. Make sure you realize that you have a grouping of analysis topics and tactics that will present you with clarity. And again, every video I make here is based on trying to implement clarity into your mindset through organized, statistically trustworthy processes, right? And those of you that have been with me for any amount of time and have seen me trade live, or those of you obviously that are in my private community, you know just how effective this is and how effective we've been, on full, and it's been on full display. You know what I mean? So my hope is that every video you guys jump on, you're able to walk away with something useful. In this case, I'm trying to drill this home as much as possible, because once you start submitting to this, I'm telling you, things change, and clarity comes before profitability. So if your goal is clarity, this is a huge step forward if you can use this analysis and trust it. And things can rapidly change just off of this simple tactic, right? Some, again, are really comfortable with just trading one market. That's fine. But in terms of observations, you're going to want to merge these three, or six, right? 3 bonds, 3 yields, and then understand the relationship that has across the board with DXY and the indices, right? So that is what I'm looking for here. Again, we have this order block down here, the midpoint, and then we have that fair value gap that I mentioned. I can actually move this up to here, because then I can actually see the fair value gap there. So yeah, we want to see how price responds from these highs off the heels of this SMT, and see if that's going to present us with something dynamic to then start attacking the previous low here, which is Friday's low, and then also this fair value gap. So you notice this too, this is a down candle, right? So we have fair value gap, down candle, right? And if it violates this low, that's a pretty clear indication the price is then going to want to seek even further lower prices. That then justifies the indices continuing to march lower, potentially aiming for the wick quadrants here, and then maybe the low here, volume imbalances, so on and so forth. All right. If we zoom out too, we could see clear equal lows down here. Maybe that was set up just to get attacked, right? Maybe they engineered that, right? It came right to it. It's pretty obvious that they stopped right there. Okay. Now we see the response from this order block as well. So aside from that low being violated, like I mentioned here, and then now changing the overall narrative, right, or showing hints that it's going to sustain that, right, we have a pretty good indication, pretty good reason in terms of targeting and overall analysis concepts. The price is going to seek sell side liquidity. Okay, so any buys are going to be half risk. We're going to push now further or more, in a normal capacity in terms of risk when we trade down to the sell side. All right, so take a look at the DXY now. All right, we can clearly see how price pretty much came down and wicked this wick here. We've now left equal lows there. But again, I'd like to see this go higher if the indices are going to go lower. So let's observe the lows here real fast. So you see it's a higher low. Let's go now, take ourselves to the currencies, if I could find them. Let me actually pull that up. So now we're going to do one of the extra risk on, risk off analysis concepts by looking at the currencies. Okay, so let's go to the daily. So we have a failure swing here. Let's go near the DXY. So we got 2 failure swings. Go to the DXY. Right, they're kind of moving in sync. Right, there's not really any clear SMT that I'm seeing at the highs, aside from maybe here, right? Kinda, right? But just looking at this chart as well, you can see that's a shift in market structure, similarly to how we viewed this over here, the indices, how it broke that low, and then from the last video I mentioned that it'll probably favor sell side liquidity if it does that. Well, if you go to this, you can see how if it breaks that low, it also do a similar thing. Given the fact that we've hit this large higher time frame monthly fair value gap and just higher time frame PD array, and now we're responding away from it again after a second attempt, after shifting market structure here, we may see, if this order block's disrespected, we'll see this low get attacked. That's in favor of seeing the indices go lower as well, right? All of that is again justified if we see this SMT at these highs prove bearishness, and then obviously attack this midpoint of this order block as well, and then fair value gap here like I mentioned. Okay, so if they hold as support and price ends up going higher, and then obviously if we see this do a similar thing, bounce away using the weekly fair value gap as support, then we will, see price continue to possibly go higher if we continue to have further evidence of that. But currently, at this current moment, I'm favoring potential sell side delivery, especially if we see the yields go higher and the bonds continue to go lower off the heels of this SMT. I mean, that's just a loaded deal. Plus, we have bearish seasonal tendencies, like I mentioned, here for September. And then going into October, there is a significant low that forms. And then you start the Christmas rally, they call it, right? Going into the December months, Christmas months, pushing the fourth quarter. So that's something that we're going to monitor, okay? Because it seems as though we've already started this behavior in the indices, right? We've already started the drop starting in September. So write that in your notebooks as well, or in your journal, wherever you do your analysis. You write down what September does. A drill that I tell my private community students to do is to take the seasonal charts and how we look at them, and mark down what every month shows on the chart, right? What you can see in the chart of seasonality. Go over each and every month. Write down your observation. Was it bullish or bearish? Was there a low or a high formed that led to something? And then you take that information, you go back the last 10 years in whatever asset you trade, and then start to study what each month expectation can be moving forward. It's one of those things that people think is boring, but again, if you think that's boring, you got some issues going on. Because even though it is boring, things require specific things to take place. Like, you have to study these things if you want to be, dynamic, at least, right? If you want to be well-rounded, there's things you're going to have to do, right? So don't shy away from that. But yeah, so again, let's look at the DXY. Seems as though there's the reverse effect in the DXY. So again, I wouldn't be surprised if that leads us to DXY sweeping that low like we mentioned, or just coming off this low and then attacking this high here, right? If this high breaks, then there's no inclination for any type of downside objectives for the DXY at all until something changes, right? Similar to this, like I mentioned, if this low breaks, it's the same idea. This would favor sell side. I'm already looking to see evidence that that's going to continue based on what the bonds and yields are doing right now. So that is the observation there. And then, like I mentioned, with this low being violated, it's the same exact logic with this low if it gets violated. And then obviously the DXY, if this high gets violated, it's very similar in terms of like this continuing to go higher. If that high is broken, and then if this low is violated, we favor sell side, right? All of that's in conjunction with all the assets we've just studied so far. Bonds and yields, we looked at the news, we looked at the currencies, then we looked at the DXY and the indices, and what the bonds and yields are showing us is that we have a pretty clear inclination that the sell side should get violated as we walk forward into the September months, which again has a bearish seasonal tendency. Okay, October has a significant low you're going to want to monitor, similarly to the DXY, who has a significant high that forms going into October, right? So then high in the DXY could form in October. Seasonal low also has a tendency to form and then set up a rally going into October and beyond for the Christmas vibes. All right, so that's pretty much all I wanted to discuss. If you guys have any questions, let me know in the comments. If you got value, definitely like, comment, and subscribe. If you are interested in private community access or want to partner with me for one-on-one mentorships, that's also available. All the information is down in the description below. And thank you for your time, you guys. Hope you are having a wonderful weekend. And we will be live yet again on Tuesday this week and Thursday, or maybe Wednesday and Thursday because there's CPI, so we could have some fun watching that as well. But yeah, but that being said, you guys, thank you for your support, and I will see you on the next one.